Gold and the precious metals are the talk of the town on Wall Street right now, rightfully so. But in today's video, I want to present you with a company from the precious metals sector that nobody's talking about that should offer us a triple multi-bagger opportunity in share price appreciation long term, and on top, a 5 to 6% dividend yield long term on the invested capital. And no, this is an established quality blue chip company. Can I interest you in this stock? I bet I can, because I am just as interested. Let's get right into it. Bull Market Lifestyle presents hot dividend winners for max dividend profits through high yields and high stock upside. Welcome to Hot Dividend Winners. This is going to be a great show today. If you followed my most recent videos on high dividend yield plays the way I like them, meaning quality companies that offer us above average dividend yields and also high upside potential in the share price, then, well, I think you were pretty pleased with the outcomes, right? Last week I talked about Vale, the copper giant, up about 10% already. Americo Resources, I pointed that company out, also copper recycling company, pretty much right after the Rural Symposium, and obviously that stock has done outstanding. We're talking, this must have been somewhere around here, I think it was, that I talked about it. So there's a lot happening right now, obviously in dividend stocks the same way as it does in the mining stocks. And we know about the mining stock craze in the gold and precious metals sector. But there is a stock that offers a super attractive long-term dividend yield of 5 to 6%. Yes, not as high as our amazing oil plays in Latin America, but very attractive because on top it offers a much higher upside potential in share appreciation than the high dividend yield stocks that I usually recommend. Usually I see about a double in share price appreciation, which is outstanding for conservative dividend investment. But this stock, in my opinion, is going to offer us a triple in this commodity super cycle. But before I get into it, we have to talk about gold and to talk about another precious metal that is completely getting neglected, and that is the key to the story. All right, so gold is all the rage. We don't need to talk about it. Here's the gold chart. We're seeing that gold is starting to lose a little bit of steam, but really, as of this moment, any weakness is getting bought up. And let me get into the gold chart for a minute, if you allow me, and then we're going to jump right into the story. Because again, there's still a lot of people that are very, very skeptical if this is not just a bear market rally. Now, I pointed out in yesterday's videos the reasons why this is not the case, but here's another reason if you need more. If you look at this run up that we saw in gold right here, and then look what happened afterwards. We just corrected over time and then broke out to the upside. And now look at this run overall in August, and look how tiny the correction has been so far. Any weakness has been bought. Now compare this to what we saw in the gold bear market. Massive rally, sell-off right away. Rebound, sell-off right away. Here we go. Rebound, sell-off right away. Rebound, sell-off right away. Now we're going up, we're going sideways. No selling pressure. We're going up, We're going sideways so far. No selling pressure. Do you see the difference? There's a difference in the buy-sell dynamic in gold. However, while everybody's focused on gold and all the central banks are buying gold, that's in the news everywhere, well, there's a precious metal that nobody's talking about that is actually the much cheaper metal than gold right now, and that's platinum. As you can see, platinum is doinking its head at this triple resistance zone right here, which may give us a great chance to buy platinum on the cheap. And cheap it is already compared to gold. So, the gold-platinum ratio, historically, bear with me, we got to throw in a couple of numbers, but this is, you will be able to remember this, is around 0.7 to 0.8. That means historically you needed about 0.7 or 0.8 ounces of platinum to buy 1 ounce of gold. Yes, platinum actually usually is more expensive than gold. Right now, as you can see, it's the exact opposite. Gold is around $4,600 an ounce. Platinum around $1,870 an ounce. So right now, the gold-platinum ratio is at about 2.5, which is extremely low. Platinum massively undervalued to the historical gold-platinum ratio of 0.7 to 0.8. If you're looking for a cheap precious metal to add, platinum is actually right now a really interesting play that nobody's talking about. Just based purely on the historical ratio, there's at least a double to triple upside in the platinum price just to get to about the historical gold-platinum ratio. So this is the story on which our high dividend yield stock from the precious metals sector is based. We know the PMG group, so the platinum group metals, they run last. But once they start running, boy, they really run. The problem is, with the PMG group, there are not that many pure plays in the market. Really, the only major pure play that we have in the market is the stock that we're talking about right now. And that is Sibanye-Stillwater, a South African PMG producer, the world's largest PMG producer, but with mines and projects globally all around the world. This is important because as historically, the stock, the blue chip stock, because this is a big blue chip company, in the PGM area, when that sector gets hot, the money is just flooding into Sibanye-Stillwater because that's the number one play. And that's big enough that the institutions can invest in it. Case of point, look at the run that this blue chip stock had in 2025. Yeah, beginning of the year, we're like around $4, because this is the nicer listing. We shot up all the way to $21 in about a year. So this is what we're talking about if this stock catches fire. As you can see, rebounded around 50%. This is a blue chip stock. This is not some junior miner or some explorer company that rebounded in August in the recent weeks by 50%, as a lot of the highly speculative ones did. No. This is a blue chip stock. 50% jump. So this stock has real power because all the money is pouring into it when they want to have exposure to the PGM sector. Now, the PGM sector hasn't caught fire yet, as we have seen in the palladium price, in the platinum price, palladium price as well. But when it does, this is the number one stock where the action is going to be. So let's talk about Sibanye-Stillwater. South African company. You know, I'm not a big Africa guy. There are a couple of countries like Ghana, for example, that I like. Long history of the commodity sector production there. It's fine, it's stable. South Africa, not so much. I prefer not to invest in South Africa. But Sibanye-Stillwater is a different story. First, global operations. Second, this is the big play for the PGM metals. Now, in 2025, just to give you an idea, they produced about 1.2 million ounces of platinum, 1 million ounces of palladium, 189,000 ounces of rhodium. They're one of the few plays for the rhodium commodity that you can get in the stock market. And wait for this, almost nobody pays attention to this. They also produced 156,000 ounces of gold. They would be, as a gold producer, on the verge of the jump from a big junior producer to actually a senior producer. That's how big their production is. Because originally, Sibanye-Stillwater was a gold company and then diversified and actually became the PGM company that it is today. But it still has this big gold arm that we basically get for free on top of the PGM story. The PGM metals make up around 50% of the revenue. So that is why Sibanye-Stillwater is such a high leverage play on the platinum price, palladium price, and then less so, but also interesting, rhodium. And also a big time play on the gold price. You know what my price target is for gold? Really nice how Sibanye-Stillwater will profit from this. Now, we have to talk about this in a minute, but first, and that is what the outlook is for the gold production and the PGM production. But first, we start with this. Sibanye-Stillwater is diversifying. And they are right now perceived in the market as, rightfully so, the premier PGM platinum/palladium company in the world, plus a gigantic gold production. However, in reality, Sibanye-Stillwater is also very active in lithium. They are building a monster lithium project in Finland, the Caliber project, of which they own 79.8%, so close to 80%. And they're building out a copper business. Well, everybody's building out a copper business. I think I'm going to start a copper company tomorrow. Some critical metals, have some zinc, but that is declining. But the copper story is the big one. And they're getting big into recycling, which obviously is very interesting. That usually becomes really interesting in the later part of commodity supercycle. So we get the lithium exposure and potentially the copper exposure down the road with Sibanye-Stillwater as well. Now that leads us to the outlook, and the outlook is what makes this tricky. Again, If platinum starts to break out and run, Sibanye-Stillwater, the stock, is going to outperform the platinum price massively. If gold keeps running, stock price is going to go up a lot. You see it here. Platinum price didn't do much in the past weeks. Gold price did, and you saw the share just jump 50%. However, for conservative dividend plays, we want to look out in the future. How steady is the outlook, is the growth? Because we want to see the growth ideally, but we also take obviously price appreciation in the commodity to secure our dividend payouts. So basically the core business, which is the PGM production and the gold production in South Africa, has peaked. It's stable. The gold production is actually starting to decline. So there's not much upside on that side. The big upside will be the lithium story in Finland, with a big lithium project there, copper potential, and recycling. So that's what we get on top of a stable business. Now, stable business is fine. In PGM, if the PGM prices appreciate, as they should in the later part of the commodity supercycle, because gold goes first, then comes silver, then follow the PGMs. And platinum specifically has a massive catch-up potential to gold, as I pointed out earlier. That is important for the dividend because Sibanye-Stillwater historically pays out around 30% of the profit in dividends. Now, this has led to a really attractive historical dividend yield since its inception in 2013 of around 4.8% dividend yield, which is great. Now, we want more, and we're probably going to get more, but that's great. However, the problem is that the dividend payout is ultra volatile with this company. So if you are looking for passive income that comes in every year more or less the same, this might not be the stock for you. This is a stock that when the PGMs are doing well, pays out 8% dividend yield, 9% dividend yield. And when the prices are down, it's going to go to zero for a couple of years. It averages out to around 4.8%, and that's what we're going to look at, in my opinion, historically. And in the future, I think it's going to be more 5 to 6% because the commodity supercycle, I expect gold prices to go up. I expect PGM prices to go up. And then we get the lithium story on top as well. But we need to understand, this is no Pfizer that is very concerned about their high dividend yield because that is what attracts investors, right? This is no Petrobras, which again knows it has to pay out a high dividend in order to attract foreign investors into investing into Brazilian oil company. So this is what we need to understand. This is a little different high dividend yield story. We're going to get a really attractive dividend. I think, to be honest, there's even upside that we'll get to 7 or 8% if platinum explodes in time for the larger production cycles in the PGM mines in South Africa. But let's go with 5 to 6% because that seems very reasonable. That's okay. Again, it's going to be volatile, but it's going to be, we are in the commodity super cycle, so we're catching the juicy upside years now, not the down years. But we're also going to get an unusually high upside potential in the share price appreciation. That's what makes this such an attractive stock in the high dividend yield universe that I like to play in. Again, it might not be for you. I'm not your financial advisor. I'm just presenting to you interesting companies. Nobody was paying attention to Petrobras or Ecopetrol when I presented these two dividend pearls, and I think I know quite a lot of you like the Petrobras story and are on that, and there are quite a few of you that are on the Ecopetrol story. And I'm sure you like the dividend payouts and the stock price appreciation that we have seen. But when I talked about it last fall and winter, that was a story that nobody really saw. Sibanye-Stillwater, kind of in the same boat, but in the precious metal sector. There are not many dividend pearls in the precious metal sector. This is one of them. That's it for today's show. I wish you a great day. We see us tomorrow. Bye-bye.